very pleased to welcome our next speaker. Trina Rozen is a CPA, and we met a short time ago. I was so impressed by her knowledge and her willingness to help us. Trina actually went through the document as I shared with you before, and she is here to assuage and present some very valuable information to us regarding the CARES Act.
My name is Trina Rozen. I am a certified public accountant. My practice is located in South Pasadena, which is part of LA County, California. I mostly specialize in individual sole proprietors and small businesses. Although I'm not exclusive to event industry, I do have background in event industry, and I work with many clients within the industry. For our attendees, I will attempt to shed more light on the new legislation, the CARES Act, as it relates to the small business relief efforts. So I'm not going to cover anything individual or anything on unemployment today. So I've separated my presentation in two parts. First is the longest part. It's on the Paycheck Protection Program. I'm sure everybody has heard about it by now. There's a lot of questions that are out there. And I will wrap up with what other products were passed as part of the CARES Act. And so I would like to start with the disclaimer that the information that I'm sharing with you today is based on what's available to our profession as of April 6th. So obviously it will be subject to some changes and additions. Understandably, when legislation comes into law, months after the agencies that administer that law ask Congress and other government agencies for clarifications and additions, so there will always be more information. I caution all of you to try to and just pay attention to credible sources and not media and social media. So the presentation that I've put together for you today will be available for all the attendees. It's a PowerPoint, and I will be citing the sources that I will be using for this presentation. Paycheck Protection Program. So everyone already heard about it. Just a quick overview. What is it? It's designed to provide quick access to cash that helps small businesses keep paying their employees mostly and paying for necessary operating expenses. PPP is a forgivable loan. I'm going to refer it from now on as PPP, that allows you to pay for up to 8 weeks of payroll, including benefits and other costs to your employees. In addition to payroll, recipients can also pay for rent, utilities, and mortgage interest, not mortgage principal, just mortgage interest. So it's a new temporary product that has been added to SBA family. It is on first come, first served basis. So you probably heard by now to go ahead and apply right away. We don't think that they're gonna run out of funds. If they do, they probably will add more stimulus money to that. So no need to panic. It's 100% fairly guaranteed. So there's no personal guarantee. So you will not going to be asked for tax returns. You're not going to be asked for credit elsewhere check where they run your credit report. So none of that will be happening. So loans are available through any current SBA lender. So most of the local banks are administering it. And so start with your bank. From what I'm hearing is you have to have had a banking relationship with your bank as of February 15th. And that's the bank that's going to help you get this loan. So it's not like you're just able to walk into any new bank and start a relationship. They're not going to help you. As of now, that's how the law was written. They might lax the requirements. Who knows? And so the most important part of this loan program is that it may be forgiven up to the full principal amount if you play your cards right and you use the proceeds correctly. So magically, it can turn into a grant, poof, and disappear. You do need to meet some requirements for it, which I'll cover later in the presentation, but that's obviously a great program. Low interest rates with no loan fees. So the loan fees are paid by federal government. They pay directly to the banks. So no bank will be or should be asking you for any type of underwriting fees. Low interest rate, 1% interest. They started with 4 at the time the law has been written. Things have changed. Now it's 1%. So amazing. When can you submit the application? The application process runs through April 30th or until funds made available for this purpose are exhausted. That's why you're hearing apply as soon as you can. Again, so right now the program is authorized at 349 billion, and you see how I have a lot of zeros. That's how billion looks like. So the first question all my clients ask, am I eligible? Am I eligible for this program? If you have 500 or fewer employees who reside in the United States, if you were in business on February 15, 2020, so you're not a brand new business that just came about in this crisis to collect, you will be eligible. Nonprofits, sole proprietors, or self-employed individuals are eligible as well. Can I be specifically ineligible? Yes, you can be. So if you're engaging in any activity that's illegal under federal, state, or local law, like pot dispensaries, they're not part of this program. If you're a household employer, so your nannies or your housekeepers, unfortunately, are not included because you're not considered a business. If you have been convicted of a felony within the last 5 years, or you're currently delinquent on your SBA loan or have defaulted within 7 years, so there's no trust and you won't be getting any money under this program. How much can I borrow? So that has been subject to a lot of debate, especially in the event industry because of the seasonal employees. So you can only receive one PPP loan. So again, I always advise my clients, ask for the maximum allowed. Then you'll decide whether you need to take it, how you're going to spend it. So the loans can be up to 2.5 times your average monthly payroll costs, up to $10 million. If your business was operating in 2019 for the whole year, they will look at your payroll reports for that year, for 2019, to establish what your average monthly payroll will be. If your business is new and it started in January 2020, they will look at the payroll reports for January and February. Is your business seasonal? So if you're not operating the entire year and you're just operating during certain seasons, your payroll costs will be based on what you paid during the 12 weeks beginning February 15th, 2019, or starting March 1st, 2019. So if some of you are seasonal employers, that's how they're going to figure out your average payroll. A lot of questions came about self-employment. I am self-employed. I don't have employees. What amount will I qualify for? So if you're self-employed, your business is a sole proprietorship, and you report your income on Schedule C on your 1040. As long as your business was operational as of February 15th, you're able to apply as well to this wonderful program. Your salary will be determined by your net profit reported on your 2019 Schedule C. It's only 2019 Schedule C. So they'll take your net profit for 2019, they'll divide it by 12 months, they'll time it 2.5, and that's how much you're gonna get under this loan. Of course, you're still subject to 100,000 annual limitation as well. So net profit will be limited to just $100,000, and so the max that you can get, you can do the math. So a lot of my small business clients ask, well, do I include independent contractors in my employee calculation for PPP? And the answer is no, because independent contractors have the ability to apply for PP loan themselves, just like I covered in the previous slide. So they're not going to be part of this forgiveness to the borrower. Can my PP loan be forgiven or in whole or in part? Yes, that's the magic of this loan. And so the amount of the loan forgiveness can be up to the full principal amount and any accrued interest. So that's actually really good if you're using the loan proceeds correctly, okay? And we'll cover what it is to use them correctly once you receive it. So of course, the first step is just to apply. The bank will help you figure out what your amount of the loan will be. So you don't need to worry about being exact. They have the formulas, they are getting guidance from SBA, so they will help you with that. So once you do get the loan, so make sure that you work with your CPA, your accountant, to spend it correctly. And we now know that the whole premise for the law was to keep the employees off unemployment program and to keep them employed. So 75% of your loan, no less than 75%, must go towards your payroll costs. What's in the payroll costs? So it's your salaries, your health insurance benefits for your employees. And then no more than 25% of that loan can go to your rent, utilities, and mortgage interest. Again, there will be more guidance from SBA. And again, continue with how can I use my loan correctly? Again, salaries, wages, commissions to your employees. Again, highly paid employees are capped at $100,000. What does that mean, capped? Are you capped at paying them only $100,000? No, you can continue paying them whatever their salaries are, but for the purposes of calculating the loan amount and the forgiveness amount, you're only capped at $100,000 so per employee. So anything you pay over $100,000 will obviously be out of pocket. Any sick, vacation, and parental and family leave are obviously part of the salaries, so that will be included in your 75% calculation. Any payments you make for your group health coverage, including health insurance premiums, dental, and retirement, are also included part of the 75% calculation. State and local employer taxes. So in California, we pay state unemployment as employers. That's also included into that 75%. And on the bottom of the slide, I highlighted, underlined, bolded, federal employment taxes, FICA, 7.65%, are not part of this calculation. So don't include it. If you do, you're going to violate the 75% rule. So that's still out of pocket. You're on the hook for paying that. That's not part of this loan. You're not to use the proceeds to pay your FICA taxes. Another question, I already laid off my employees and cut their pay. Now what? What do I do now? So once you get the loan, the loan amount can still be forgiven if you bring them back. So if you bring them back, restore their salaries, and restore your FTE count, you will be able to apply for loan forgiveness and it will be forgiven. So like many of my clients that were forced to start immediate layoffs, if you laid off people between February 15th and April 26th, nothing is lost. You could still bring them back. What is FTE? So FTE stands for full-time equivalent, and that's really important for event industry clients because they have part-time employees. So I'm going to address it in the next slide. Again, continue on how to use my PPP loan correctly. You're left with 25% that you're not going to spend on employees. You can pay rent, utilities, interest on mortgage loans, interest on any other debt that you have, that you incurred before this crisis. Can you spend more than 75% on paying your employees? Of course you can. You just can't spend less. Can the loan forgiveness be reduced? And of course it can be. So that's why it's really important to work with your CPA or accountant to make sure that once you get the loan, that it's spent exactly as the law is designed. So, the goal is for all my clients that are getting this loan is for them to get 100% forgiveness. Reduce the salaries of your employees by 25%. If you don't restore them back, you will be subject to loan reduction. If you don't maintain your employee headcount, you will be subject to loan reduction. You will be applying for loan forgiveness through your lender. So the bank that has given you the loan will be the bank that will be processing your forgiveness. They will be asking for very detailed documentation. So please be very ready with your payroll records and with your bookkeeping records on how you spend that money. Coming back to the concept of FTE. So FTE is a full-time equivalent. of an employee. So if you are like in the event industry, you have many part-time employees that you lay off right after your project is done. And so a full-time employee is calculated to work 2,080 hours per year. And that's the calculation is right there. So what I tell my clients for the purpose of this loan that have part-time employees is to take your 2019 part-time employee hours, add them all together. Let's say it comes up to 10,000 hours. And then you're going to divide them by 2,080, and you're going to come up with full-time equivalent employees that you're going to put on your application, because the application asks you how many employees did you have. So again, if you just have full-time employees that work full year, that's not an issue. But an issue becomes when you have part-time employees and now you need to convert them to full-time employees. Questions that I get from my event industry clients. Okay, I've converted my part-time employees to full-time employees. I had 15 part-time employees. Now I have 6 full-time equivalents. I got the money. How do I decide who to bring back? So that's a good question, because that part-time employee, John, could be on unemployment right now, and he could be getting paid a full amount of salary. So he doesn't want to come back to you in part-time basis. So what I tell my clients, if there's no clarification by the time you get the loan from SBA, we'll just decide who the lucky part-timers are and bring them back on full-time basis so you can get that loan forgiven. So what happens if PPP loan proceeds are misused? SBA will ask you to pay them back. And if you knowingly use the funds for unauthorized purposes, you will be additionally liable and charges for fraud. What documents will I need? What documents will the bank ask? So you will need to fill out an SBA Form 2483. You will need payroll tax filings, your annual Form 940, your quarterly Forms 941, and your annual Forms W-2. If you're an independent contractor, you might be asked for most recent filings of 1099 MIC. You will also need to know the cost of your group health insurance, how much you pay monthly. That's obviously not part of your payroll reports, so you will need to know that as well. Also, if your company has employer retirement contributions, you will need to know the cost of that as well for 2.5 months. You will also need to know the annual payments of state and local taxes. So in California, all employers are filed quarterly California DE-9. For independent contractors or sole proprietors, you will need to establish your income, and most likely it will be established through your Schedule C from your 2019 tax return. And the reason I say most likely is because we don't have clear guidance from SBA yet, but that's what we think. So if you can muster up your 2019 1099s, any other commissions income that you have received, you will be in good shape. So what certifications need to be made on PPP applications? There's about a dozen certifications. I'm kind of highlighting 3 that I thought would be most important for this meeting. Again, you're certifying that you're not a new business that just came into play to take advantage of this loan. You were in operations on February 15, 2020. The funds will be used to retain your workers and maintain payroll and make necessary operating expenses like rent and utilities. And then a very interesting and a very subjective certification is current economic uncertainty makes this loan request necessary to support the operation of the applicant. Of course, if you have been shut down, your events have been canceled, yes, you have extreme economic uncertainty. But what if, your business has been affected and maybe it's been affected by 20% or 30%? Do you qualify for this loan? So I've reached out to my bank connections, and they have said that at this point, the SBA guidance says there is no guidance. You don't have to prove of how much revenue you have lost. You just need to prove that you have employees or that you have made income in 2019. And that's the only requirement to get that loan. So the bank is not going to ask you, well, how much money did you lose? And what was the percentage of the revenues that you have lost? So that's not going to happen. So I thought, unless SBA issues more guidance, at this point, I just tell my clients to just apply. You don't need to determine if you need the loan or how much impact your business is going to suffer. Just apply, get in line, and apply. When will I have to begin paying principal and interest on my PPP loan? So you will not, once you get the loan, you don't have to make any payments for 6 months following the date when you get the money. Part of the loan, the interest will be accruing on the loan. So that 6 months deferment period, you still will be accruing interest. And with that, Diane, I would like to open the floor for questions.